Ed, and tonight we're talking about smart money and a number of different topics as it relates to smart money. So I'm pretty excited to have Asif Nasim here today. Thanks for being here, and thanks for turning your cameras on when you can. And we are going to have sort of an open discussion tonight. We're going to go through a number of questions that I have for Asif just to get us started, and then we'll open it up so you can all get your own questions on the table and have a chat with Asif directly. 1 second. Hanny, welcome. You have your hand up. Did you mean to raise your hand? Okay. So let me give you a little bit of background on Edge. For those of you who don't know us, we are the entrepreneurship hub at Sheridan College. We are a community of people from all walks of life, and we believe that entrepreneurship is a significant piece of making change in society. And so we are focused at Edge on supporting impact entrepreneurs, that is, people who are making a difference as it relates to the challenges identified by the UN SDGs, and making that difference through entrepreneurship ventures. So that could be nonprofit or for-profit, but either way, looking for ways to address those challenges through entrepreneurship. So we always want to acknowledge that the land on which we gather has been and still is the traditional territory of several Indigenous nations, including the Anishinaabe, the Haudenosaunee Confederacy, I always stumble over that, the Wendat, the Métis, and the Mississaugas of the Credit First Nation. Since time immemorial, numerous Indigenous nations and indigenous peoples have lived and passed through this territory. We recognize that this territory is covered by the Fish with One Spoon Treaty and the Two-Row Wampum Treaty, which emphasizes the importance of joint stewardship, peace, and respectful relationships, which aligns very nicely with what Edge is about. Sheridan affirms it is our collective responsibility to honor and respect those who have gone before us, those who are here, and those who have yet to come. We are grateful for the opportunity to be working and living on this land. So I want to just outline for today some of the road, I guess. The first is to mute when you're not speaking, if that's okay. I know most of you are already muted, so thank you for that. Your webcam isn't mandatory, but we do like to see people that we're talking to, so feel free to turn it on when you want to ask your question. And then if you are uncomfortable to do that, or if you're in an area or have an issue that you can't turn on your camera on and don't want to ask verbally, then you can type your questions in the chat box. And as you've already heard, this session will be recorded. So without further ado, I'm pretty excited to introduce Asif. Asif is somebody that I've just met actually only a few weeks ago, and we had an amazing conversation. I felt comfortable to ask my questions, and so I thought, what a great way to bring him into the Edge community and get him to come out and talk to us about a key issue for many of us as it relates to growing our businesses. We have certainly had challenges around how to get our ventures supported financially, how to make sure that we have the funding that we need. And I know many of us have had to seek alternative solutions. And so it's really good to have you here, Asif. Asif is an entrepreneur. He has, well, going way back, Asif, you had a background in financial services, did you not?
Correct.
And then you went and started your own venture. And eventually exited out of that, and now Asif is an advisor to entrepreneurs and business leaders, and he's an angel investor. He's involved in a lot of different things, and so Asif, I'm going to let you tell us a little bit more about your background, because clearly I murdered it.
Yeah, no, not at all. Thanks so much, Lisa. I really appreciate it, and I gotta give it's funny, when I spoke to Lisa, it was just such a great conversation, and when we were talking about today's event, I was like, how do we do this? And I'm like, Lisa, you know what? I just loved having a conversation with you. I just kind of like your approach, and I think it's amazing, having mentorship programs, and I'm really honored to be here today and super excited. So thanks for having me. As Lisa mentioned, like I'm an entrepreneur, and even when I was preparing today, I was thinking about like, my first experience around investing and things, and I could recall like at a really, really young age, like just even, I think probably the earliest was probably like 7 or 8, thinking about what's my career going to be, and, what do I need to kind of do? And I'm not sure why I was thinking about that at such a young age, but I started investing when I was 16. I really had a real strong passion for investing. I was super curious on the stock market and how people made money and created wealth. And anyways, that kind of led me down a path where, I started investing in real estate, and then I studied economics in Ottawa. I should have mentioned I grew up in Ottawa, was where I went to school. And from there, I came to Toronto. And, it's funny, like, I think the reason mentorships are so important is that, when you look at, people and the impact they're having in your lives, reflecting back, I remember I applied for a job as a stockbroker, and the branch manager actually, rather than send me a standard rejection letter, he said, I think you could actually have a really good career in, as a broker, but I really actually encourage you to go down to Toronto, meet some people, and I think you could actually have a happier life there. And I remember thinking, wow, man, that's really nice that someone kind of believed in you to kind of give you a chance. So, anyways, I actually put a list together of about 40 different companies that I wanted to meet, and I just kind of networked my way into a job and started into financial services and investment management. And I spent a good part of my career in investment management and sales. And I had such a great time. I had a chance to go down to Omaha. I met with Warren Buffett. I met some great investors along the way, and I learned a lot about stocks and companies and process and themes and things like that. And and after that, actually, I said that I really wanted to be an entrepreneur. I actually was a co-founder at a company called Wickware Communications, where I kind of went from the sales side to the marketing side. And for 10 years, we worked with about 80 brands. We worked with companies like Vanguard, HSBC, Invesco, PIMCO, like a lot of big brands, and understanding we only did financial services. So we really understood kind of the methodology of, what made some of these companies unique. And, that was a really great opportunity to meet many brands around North America. And when I sold that, I said, well, I really didn't have like a big master plan. I was thinking, what's kind of next? And I actually got involved in angel investing and mentoring and doing some consulting work. And I think that's kind of the resume stuff, if you will, but like kind of the stuff that really gets me really, really excited on things is like I love learning. I just feel like connecting people and helping people is really something I'm super passionate about. Mentoring in general is something I'm really passionate about. And I'm kind of happy to say, like many of the people that I've worked with, I've had a chance to kind of keep in touch with people, had a chance to watch them become entrepreneurs, to move ahead in their career. And I find that personally very gratifying to see people that you've
Yeah,
believed in.
I'm with you on that.
Yeah. So it just feels very gratifying. And just to kind of close this out, I just thought I'd share kind of a personal story too, because I'm like, when you say all these things, what will people remember? I'm a massive Toronto Raptors fan, and I remember when the franchise got awarded. And when I first came to Toronto, I remember buying some tickets to the Raptors. I saw Michael Jordan play, and like up in the nosebleeds, I could barely see it was Michael Jordan. He was actually being escorted. It's the only team actually I've ever seen being escorted by a police department. They had a full Toronto Police Department escorting him in, and just seeing Kobe and Shaq and back in the day. Anyways, long story short, I was fortunate enough. I don't know if you can see my picture in the back, Game 7, or do you guys remember the Game 7? I hope there's a few Raptors story fans on this, because if not, this story will not be good. Will not be a good story. But Game 7, and Kawhi hit the winning shot, like they call it the shot, the 76ers. My wife actually bought tickets to the game, and if you ever see this shot, I'm actually in the shot. And for me, it's like kind of calling full circle, sort of, starting in kind of the nosebleeds and stuff. And I think um, it was probably one of the most memorable things of my life. And just quickly to kind of summarize, I had heard that at Terminal 3 they had a picture of the shot, and with the fans on there, and people who worked at WestJet were like, you're at Terminal 3, and I never fly out of Terminal 3, so I thought I'm never going to get a chance to see this. And just when the pandemic hit and COVID was there, my wife and I actually flew, ironically enough, to Philadelphia, and we flew on her birthday, and were able to take a quick shot of us in front of this mural. So I thought that was kind of a fun and kind of ironic thing, because after that we weren't able to travel beyond that. So
Wow, that's awesome. Aya, are you a Raptors fan?
yeah, totally. Yeah, it's funny. I mean, it's one of these things I think about the Raptors. Like, I was downtown when they won, and I went to a couple of the finals games and stuff. And I always tell the people, like, when you're in those situations, you never know if you'll ever experience something like that again
Yeah,
in your life. It
yeah,
really just causes you to really appreciate moments in life that, and
yeah,
I think, to be honest with you, it's collective too. Like, when
yeah.
you see people, that joy and the exuberance in life, it's really a special time. Like, I live downtown, and during the pandemic, I saw 4 million people in the pandemic, and then I walked down King Street and I saw nobody. So the
Mm,
extremes of
so
life.
strange, eh?
Yeah.
Crazy. I was asking Aya if she's a Raptors fan because I was thinking we got the thumbs up from the guys here, but we didn't see her reaction.
Yeah, that's what I'm saying. I hope there are a couple of Raptors fans on there. I can't see faces, but I hope everyone has
Uh,
relates.
I'll just say, yes,
yeah.
I have just moved to Canada like the past like 2 years ago, so I don't really know much.
Oh,
Oh,
okay.
okay.
Okay. Well, I'm with you. I'm not like I go, but I'm not like the raging fan that these guys apparently are. So let's talk smart money and investing and angel investing. How did that all come about for you? How did you become an investor? What is it? What's been your experience?
Yeah, well, it's kind of funny is that, like, as I mentioned, I was investing as a teenager in the stock market, and I'm really curious about investing just in general. Like, I've done some investing in Bitcoin, and I love asset classes. I've done some investing in real estate, and some yield products that support small businesses with shred credits that are, like,
Mhm.
great
Yeah.
income type products. And I think there's a couple of things. I read about the decline in public markets as people were putting less and less money on the public markets. I think over 10 years they had declined by 40%.
Mhm.
And there was actually kind of I was reading an article just on sort of the gap in wealth, and that how innovation and private equity and VC were creating a lot of wealth. And then I just thought to myself, I'm like, I actually don't know much about angel investing. So how do I get involved with angel investing? How do I learn about angel investing? And obviously this is growing more and more in society around startups and things like that. I thought, how do I kind of create some knowledge around that? So that was kind of the starting part. And then sometimes I think in life you need a little bit of luck. It's it's fate, destiny, luck, whatever you call it. I actually received an email from the family office network that I belong to, just for
Mhm.
like content, and they asked me if I wanted to meet with an angel investing like pool. And I was like, my first
Mhm.
reaction was, don't respond to these kind of emails. What's it all about? How does it work? Because it made me actually a little bit nervous. And anyways, when I did some research, actually, I found out that the founder of the company's called Keto Tech. Paul Russo is actually based in Montreal, actually based in Silicon Valley. I'm sorry, but he was Canadian, and he had 50 years of angel investing. And I said, well, I'm just going to take a chance. Like, I'll just kind of meet with this guy and we'll see how he goes. And it was a really serendipitous meeting. Like, I felt very fortunate to have met him. And it was actually one of my largest investments that I made. And basically what it was a pool. At the time, it was 20 investments, and we moved to 62 investments. But it was just kind of speaking my language, because it's like, how do you get diversity from a geographical standpoint, from an industry standpoint? And they actually had an OTC company, and they were going to relist on the Nasdaq. So they wanted to create liquidity, and their premise was to really make angel investing a little bit more accessible. So that's how I
Mhm.
kind of got started. And then what's interesting is that it kind of really caused me to reflect, to think, well, what do I want out of this? Like, do I want to get return? Sure, of course. I mean, there's a reason why you invest. You want to get return. You want to get knowledge for sure. So, how do I increase my knowledge around different industries and sectors and businesses and meet some incredible entrepreneurs? So I said, well, let's check on that. And then I thought, like, for me, because I like people so much, I really wanted to develop a community. Like, just how do you develop more relationships? And I guess lastly would be kind of experiences around there. So that was kind of the start of my angel investing. And I thought, like, if I could do it in a smart way where, and I remember actually when I spoke to Paul, I asked for 4 references. And he said, no one's ever asked me for that many references. And I go, well, I'm nervous. I'm not going to lie. Like, I want to know more about you. Like, I want to not to get, make a bad investment decision.
Mhm.
But I met some incredibly smart people, people like in New Jersey that are doing entrepreneur programs at the state level that have been investing for
Wow.
40 years. And I thought, what can I learn from these people that, that I can, circumvent making mistakes and really kind of glean a lot from a knowledge perspective and also a community perspective. So, yeah.
So
And then,
you,
go ahead.
no, go ahead.
Oh, I was just going to say was that, for me, relationships are really important. And like I was reading, actually, there's a book I was reading that was given to us where it's called The Intelligent Investor. And Tim Draper, he's done some really amazing deals. I actually find him really interesting. I mean, he's very bullish on Bitcoin. He's, kind of bearish on commercial real estate. And, we all have our own approaches to what we kind of believe is right. And, he's a very successful investor. And he said, you know what, focus on quality relationships because you can learn anything from anyone. And, in the startup world where, even in my portfolios, because of the nature of them being pooled, you own hundreds of companies, can be a little bit overwhelming at times. I think having quality relationships is something that's kind of near and dear to my heart. So that kind of path into, angel investing got me to join Keiretsu, which is one of the second largest angel network in the world. And then I just got involved. I got involved with due diligence, and it's an opportunity to kind of screen companies to learn about different things and help contribute back to the organization.
Asif, you're very um, methodical, I guess I would say, in your approach. And yet this is, I may be badly wording this question, but this is investing is as much an entrepreneurial venture as starting some organization or business in some ways, right? You're taking some risks and you're moving
Totally.
forward, but you're very calculated. How does that speak to your, I guess, any investor style? Is that the way they would approach things?
Yeah, it's a great question, actually. I mean, I think, one of the things I liked about Keiretsu when I joined, and I'm guilty of this for sure. I told my wife, I'm like, I love all these companies. I want to invest in them all. When you first meet them, I'm like, they all seem like lovely people and that sort of stuff. So you have to kind of just manage yourself to go, okay, well, it's a really great question, Lisa. Like I think about it, okay, well, what's my portfolio? What's my allocation going to be? Do I want to diversify into tech and health sciences? How's the kind of deal flow going to be? How do I follow some smart money? How do I learn from this? What's kind of like, at the end of the day, we got to think, what are we going to gain out of this? It's really important. So I think I had a sort of an investment style that I use in public markets. And then I was thinking in the angel world, it's like, you're right, you're absolutely right. It's like a startup, and it's like, how do you mitigate risk, and how do you, because the thing is as an angel investor, we see hundreds of deals all the time, and to be
Yeah.
honest with you, sometimes it's overwhelming, right? Because you know people get 10 minutes and you got to absorb things, and you go from health sciences to artificial intelligence to tech, and we're not all versed in, like, when I go to biotech, sometimes I'm like, oh my God, like, it's tough to, stay focused and understand all the nuances of science. It's not my background. So, but I think you're absolutely right. I think having a methodology and trying to figure out a bit of a discipline, and you have to refine, I think, as you go.
So what is smart money? You keep referring to it. Haney and I were talking about it this morning. What is smart money in your mind?
Yeah, well, I think, smart money is funny. So I'm an advisor to a couple of firms. One of the companies called Product Vessel. They actually help like e-commerce brands scale. So they'll invest their time and resources, and they've got a wheel with SEO and digital and content and email marketing and affiliate marketing, and then they'll provide capital to help them grow. And I've been advising them for about a year and a half, and having gone through the experience, actually, ironically, we just kind of pitched last week, was how do you, like, I think the thing about startups is that businesses change and evolve, and I think as entrepreneurs and as investors, how do you help create the right resources and the right capital to help you succeed? So you can have passive money. So I don't want to say not smart money, because that doesn't sound very nice, but passive is probably
Passive is good.
but there's passive money where it's like, okay, here's the money, and you go and build the business and everything else. But I think smart money, another kind of euphemism, would be like active money on the other side of, like, I think of like a Bill Ackman, where he takes strategic positions in company, like Chipotle. He just did one with Universal Music, and he's on the board, and he helps with strategy, and he brings in a new CEO, and he helps with capital raise, and they help kind of, what do you need? Do you need financing? Do you need market strategy? What are all the different elements that you can help? And I think it's important to bring in certain skill sets, for sure. Very, very important on the smart money side. And I think it's also equally important to bring in the right type of people, the type of people that you can work with, that, inspire collaboration and creativity and support you, and, will be honest with you, when you make a mistake, that to say, listen, I think this direction's there. And I think that, that's the kind of difference of, passive capital versus smart money and active capital, to help support the entrepreneur and bring more value and more skills than just the money itself.
Haney and I were talking this morning about how smart money is also perhaps where an investor brings also infrastructure and the ability to scale quickly by leveraging what they already have.
Yeah, absolutely. And I mean, it's funny, like, I've been on a couple of boards and things, and one of the ones, the company, Lisa, it's like a real estate company. They're doing development and things. And, when I was talking to the entrepreneur, I was like, I think we should look at different ways to raise capital. We could use fund serve. And that's not his background. He's in real estate. And, I was talking to him after. I just kind of mentioned it, not casually, but more as like, this kind of makes sense. Like, you should get 50,000 advisors that can, get your product. And he's like, that was a big game changer for me. And we joke sometimes, because sometimes we'll do things like, it's just about saving time. It's like, how can people help you get there quickly, and how can people help you do it? And I think that's kind of the thing, to find the people that will go to battle with you. That everybody's busy, so people that will dedicate time, that will show commitment, that will use their expertise, I think is the right kind of mix in terms of advisors or smart capital.
So, Aya, is it okay if I raise your issue here for a minute? We were talking about Aya's business. She has well, maybe you should explain it, Aya. Your 30-second view of what it is you're doing. I don't want to murder it.
Oh, it's okay. I was thinking of like basically teaching people about like climate change and how to live a more sustainable lifestyle through VR and WebXR. And basically, like, the future is basically have like an educational entertainment center. Like, basically think of like the Modern Science Technology Center, like the Ontario Science Museum, but it operates only through like virtual reality and holograms, and people go in to learn more about climate change and how to live a sustainable lifestyle.
So her concept, if it's okay, I'll jump in. Her concept is relatively early stage, right? She's working on concepts. And obviously, in some ways, the vision is big and requires big capital investment. But we were talking about what could be a walk first approach that would make her more attractive for investment. So we were thinking about some sort of model where she finds either a partner that already has infrastructure in place, like take an Ontario Science Center or something like that, brings her idea, partners with an organization like that, and then goes and finds investment to take it to the next level. What's your thinking on something like that?
Yeah, I love that thinking. It's funny. I mean, especially in the angel world where like, there's like family, friends, and then like kind of angel, if you kind of look at the continuum. So I think if, a lot of times where we've done some investments, especially at earlier stages, sometimes you'll get funded if you've got a strategic partner. So I was thinking about actually a company. I didn't invest in it, but I thought they were super smart. They actually basically were taking like medical research. So let's say you've got, the average doctor is very busy, so it's hard for them to, glean like hundreds of pages of reports. And they were creating like infographics of it. So they're like, look, here's a one-pager summary of all my research and how it pertains to you. And they were partnering with Harvard, and the fact that they had that was a big kind of you know vote of confidence in the sense of, like you said, like a strategic partner of someone that you could share your idea with, to kind of like, okay, we'll back this, and then go out and say, look, we've looked at, the viability of the technology, we see the opportunity around that, and then, it's like, we need X amount of dollars, and like be very focused. This is how we think that we're going to do it. So I think having that is really kind of important, at least at the angel stage.
It's interesting. Sometimes I think ventures go too quickly for investment. What's your thinking on that?
Well, it's a good question. I mean, I think it's, well, let me just ask you, Lisa, just to be clear, like, you mean, did they invest too early in a lot of companies, or is that what you're...
No, I mean the other way around. The venture hasn't got a proven model, hasn't even gotten to first, conceptual model, and is already looking for investment.
Oh, sorry. That's why I just wanted to clarify, because my mind went to venture capital, and you mean like literally the business is too early. Yeah, I think that's very fair. I mean, when I look at the screening companies and stuff like that, I'm like, we go through a lot of screening for a lot of people, and it's just too early, and so.
And is that the message you share? Like, do you explain? Does the network go back to them and say?
Yeah, that's great. I'm glad you brought that up. Because Lisa, like, I think that one of the things, certainly with the groups that I'm involved with, like, it's a very supportive community. So I think if someone says you're, not ready for, capital yet or something like that, it's not meant to be like punitive or difficult or anything like that. And I think, obviously bandwidth is a bit of a choice, but where we can, we try to help firms. Like I've had a business that I've had a couple where I've met with, and I'm like, I'm not really sure if I'm ready to invest, but I'll give them 4 introductions, because I'm like, seems like they're pretty solid, they're competent, might be a little bit early, I'm not sure if I can invest, but what are the ways that I could do that? And, part of that's kind of like just putting yourself out there where people, are magnetic to you, or they say, oh, maybe there's one thing I could do. And I think the angel community in general, there's a very well-connected group, and they're very well resourced. So, for example, with the VR and the environmental, it's not something that right away comes to my mind, but maybe if, I reach out to my network, there's something along those lines that you can help. So I think that, it's especially, what, people come back too. We've had people come back for a second pitch or even a third pitch, and, they get funded.
That's
so
awesome. That's good to
know.
Yeah. Good to know.
Yeah.
Sometimes the learning is important, right?
Yeah. And I really appreciate that, because I can tell you, like, I just did a pitch, and I'm like, oh my gosh, we went through the deck, and it was like, I say to a pitch, it was like the firm I advised for. And I'm like, it went really, really well, but they had a lot of feedback for us, even after a couple of months and things like that. And I was like, I called the president up, and I was like, you know what? It was really helpful. Like, you did it in a really good way. And I'm like, it's funny when the tables are turned, and I would say to people, I'd rather invest than pitch, because that's hard, man.
It is. Haney, do you have a question for Asif?
Yes, I do.
Yeah, jump in. I was going to turn to you next.
Okay, great. So thanks, Asif, for having us. It's a great pleasure to learn from you and to know what should be the next step. So basically, my very fundamental question, when should I feel that this is a good timing for me to start approaching, and it is time for raising capital? so I can save some energy and resources of pitching and going with angel network, and then they will tell me, sorry, you're not ready yet. So when is the readiness time for my venture should be, or any sort of parameters or pulses to tell me, am I investment ready now or no?
Yeah, well, it's a great question. I mean, I think part of it is that, it's hard, like, just to say in general terms, but I mean, I think about it like, if you think about it for what we look for to kind of flip it, I would say, like, if it's you've done your research, the market, the total market, your sizable market, you're realistic in terms of what you can do, specifically what the use of capital is, that you've spent some heart and soul on it. Like, I think, one of the things we look for is, I'm kind of curious, like, why people have seen this opportunity, what problem have they seen, how do they kind of solve it. I think that, like, sometimes it's good to share it with some family and friends, and then I think, listen, even if I can do it, I'll be happy to look at it. And then I think part of it's like, it's a judgment to a screening call. So if you felt like you've done some good work, you've got something where there's a good amount of viability of the business, I think that you could go to a screening, like an angel group and those are no cost, so you can kind of do it. So I think the key is that as Lisa said, having a general idea is one thing, having like potential customers, being specific on revenue, looking at what the competition is, like really kind of zoning in on it and doing some work on it to go, look, like, and I think the other thing to keep in mind too, as investors, like, we're going to say, all right, well, how do I make money in 7 years? Like, tell me, how you're going to, is it a merger? Is it like, maybe an IPO? Is it venture? Is it, what's the kind of path that's going to kind of lead to an investor? Because as investors, we want to know, we're locking up our money. How do we get a return? So if you feel like you can answer those questions with a high degree of confidence and you can do it, then I think the timing's right.
So to give you context, Haney's fairly far along. He's developed a product. He's got sales. He's Haney, you want to jump in?
Yeah, sure. It's my platform. It's called Rest Counts. We've been in the market now 2 years. This is my 3rd year, pretty much from the name Rest Counts. So it is restaurant discounts. Okay. It is registered trademark in Canada and US. The fundamental idea, it was for the professional people on the lunch break, where you reserve your table and pre-order your food. So by the time you reach your restaurant, your meal is ready. So you, within the same half an hour, 45 minutes, you could have the opportunity to eat in Jack Astor's or Milestone instead of the quickie stuff of Timmy and McDonald's. And it is win-win, because restaurants on this time, they are not busy and they are okay to give some sort of discount. So the fundamental idea is to get 10%, 15%, whatever it is. So with the same exact amount that you're spending in McDonald's, $15 or $18, you can get a nice, decent meal. At the very beginning, we were my slogan at that time, it was your new dine-in experience. So you need to really experience your lunch, having your music, service, everything, not in rushing, looking to the watch every single minute. I'll be late, my boss will give me, and so forth. And then we introduced a takeout option as well, because the market did not respond to the concept of the pre-ordering fast enough. It was a challenging, because I'm introducing totally new idea, which is not common. So I need to educate my users, educate my restaurants, educate my restaurant staff. So many of education, which involved a lot of spending and training. So at that time, I introduced a new feature, which was a takeout, where everybody's happy of it. Just place your order, you will get it and go. So you don't need to spend time to wait. So I'm cutting the wait, and of course with the offer. So pretty much like Starbucks app and Timmy, everything. And thanks for COVID, this takeout, it went fantastic for us. It is a number of orders jump from 1 to 2 orders per day to now my minimum per day is 25 orders. And weekend, I'm touching 50 to 60. As of now, I'm having around 300 restaurants in my platform and having around 15,000 users.
So
wow,
sorry,
sorry,
yeah. So he's at revenue, right? Is it like So that makes it more attractive.
Totally.
Yes.
Yeah, yeah. You know, it's
Want
funny.
to
I mean,
speak
listen.
to that?
Yeah, at least I was going to say that that's a very impressive pitch. You know, I mean, I think you've identified a problem. You know, for people with health, you've identified a gap in terms of like the alternative between Tim Hortons and dining. I think the space and the trend towards people going back to restaurants and things is important. I think people are going to be thinking around. So, I mean, that's what that's a I feel like that's a great example. I mean, I think just kind of understanding like your market, having revenue, having technology, showing growth of earnings, showing how that can, you know, uptake, how it works for consumers, how it works for entrepreneur or like restaurant owners, how it can scale quickly. Those are the sort of things that entrepreneurs are going to say, okay, I can see how, you know, if you've got 15 or 20 clients and you don't have the capital, what could you do? Like, you know, and then they're going to want to know like how you generate additional clients and what's the onboarding process and, you know, how much margin are you making and, you know, that sort of stuff. But I mean, that sounds like a, you know, you've done, congratulations. I mean, I didn't expect that, but yeah.
So the question in my mind, and Haiti, I'm going to jump in and ask it for you, is he's got multiple competing priorities, right? Like many business owners, but he's at the stage where he can either push harder on sales and spend his time and effort and energy there, or is he better off spending the time to go and pursue investment capital and preferably smart money, where he's going to have somebody who can help him carry it forward and move it forward faster. And I guess I'm sort of throwing the question out there. I don't know if it's your personal answer or if you just sort of want to talk to it.
Yeah, well, it's a great, you know, I think it's one of these things you know, capital is always tricky, right? Like when you dilute, you get investors, there's accountability, there's responsibility, there's pressure. And, you know, I've had some entrepreneurs that have grown the business without it and have done extremely well. I'd want to take a little closer look at it because, you know, part of it is that like, you know, you map it out and you go, all right, what does 6 months look like? You know, what could I do in 6 months with some of the strategic? And I mean, obviously you're closer to the business, you have a good sense of what that is. Or you could say, you know what, there's a window here. You know, my window is 6 months and I think there's going to be competition. I really want to get, excuse me, a strategic, smart money because I think this can scale quickly and that's what I want to do. So, you know, there's kind of two options. I don't know if there's a right answer of like one or the other. Some of it's kind of feel in the sense of like, you know, can you do this on your own? Do you want to kind of get a smart thing, like a smart investor that could maybe kind of do things, or get like a strategic where, you know, you get a bunch of restaurants and you sign on very quickly. And the other thing I think I'd want to know is like, what's the sales cycle like? If it's a very long and arduous sales cycle, you know, maybe, you know, getting a strat would be a little bit quicker so that you can get up to speed. Whereas if you're onboarding and you're doing it very quickly, and maybe it's just a question of additional resources. So
Yeah, it's one of those chicken and egg things.
yeah, and I think, you know, part of it is I think like, this is where I think, you know, not just my opinion, but, you know, depending on what type of investors you get, 5, 6 with, you know, people that are worked in the restaurant industry, work in like the lending business. Maybe there's access to cheaper capital. There's, you know, people that even work on, you know, grants and different programs like that can really kind of help that process. And that's where I think it's like, you know, there's a bit of a gut check, reality check where it's like, okay, what do I want? Just money, or do I want something kind of strategic? And then, you know, and maybe, to be honest with you, some of it comes from a point where you go, okay, you know, like I think most human beings, we hit a bit of a wall and we go, all right, you know what? I've just got to do something else because, you know, I can only grow so much this way, or, you know, I need to get more money to invest in the tech or something like that, you know?
I'm going to turn to Jesse Lynn's question. Did you find it difficult applying what you learned from your own experiences into your method as an entrepreneur? And what was the best way you were able to organize and prioritize it all?
Sorry, could you repeat that one more time? I just want to make sure.
Did you find it difficult to apply what you learned from them? I think she means from your fellow investors. I'm not sure. Jesse, then jump in if you want. Into your own method as an entrepreneur, and what was the best way you were able to organize and prioritize it all?
Well, organize and prioritize, I think, is still something I battle with, to be honest with you. Partly because I love kind of being involved in companies, and I can always reflect that, you know, I love to put my heart and soul into things. So I'm very conscious about not taking on too much. So that's kind of important. And then some of it is, like to what I said before, I think it's really important to think about what do you want, So for example, this company that I deal with in real estate, they've got properties in BC, we're working on a project in California where we're working with a legal firm to raise capital for some projects. So I'm like, I definitely have an interest in real estate. So that's kind of interesting. I'm very interested in e-commerce and helping brands. So that kind of checks the bucket with Product Vessel. I would love to find like a fintech and stuff. So I think in some ways, I think about it from a portfolio standpoint of like, investing of like, my whole portfolio and how that's done. And then I think about it with a portfolio on this side to go, what are the different type of people, projects, clients that I want to kind of help, help my skill set and then help broaden just my fulfillment of stuff that I absolutely love. Like the stuff on real estate, I'm like, wow, I never knew some of the things I'm learning around development and that sort of stuff. And I'm able to bring a skill set to help market that into the advisory channel. So I'd say that, it's important to kind of keep looking at it to prioritize because sometimes, when you put yourself out there, a lot of things come back. I had a call this morning with an entrepreneur and he asked me, he was interested in kind of me being an advisor. I love this guy. I love his business. I'm super passionate. And I just have to be honest with myself and with him around what I can take, So time is always, it's always
at a premium for everyone, I think. Riaz, did you want to jump in with your?
Yeah, thank you. I'm really enjoying the conversation. Thanks for the insights, Asif. My question was really focused around kind of very early rounds like friends and family, right? And so some sub questions related to that specifically. So first part of it is related to like who is considered friends and family. So I know there's, for example, rules around accredited investors and things like that. How strict is that? Or like, it's kind of like sounds like a little bit of a loose definition, anyone in my network, or is that enforced in any way? So first question is, who is considered friends and family when you're, seeking kind of people to back you very early on?
Yeah, it's a good question. To be honest, I'm an accredited investor, so I don't know kind of the legal implications of it. Like most of the deals, well, not most, all the deals that come to us are because we're accredited investors. So I don't know the legality of the way that that's enforced or how that's done. I could, reach out to some of the people on the legal side. Sorry, I just
no, that's okay. I can definitely check somewhere else as well. I just thought in case you knew. The
Sure.
other part was just around kind of like the stage at which you kind of, so let's say, friends and family might be, your first checks. And is that like, I've heard different things around kind of amount of traction and you've had to maybe have launched something, maybe you have a little bit of revenue or something, but a lot of times to get some of that, you need money to maybe hire people or to be able to build something. And so like how much of your own money, if you have that option versus, overall, I've heard, the longer you can kind of maybe sustain yourself, maybe more of the company you can keep, but then it maybe slows you down. So just kind of any thoughts on like your first checks around friends and family, like when is the right time to start kind of exploring that versus trying to bootstrap, self-fund, as long as possible. Like, of course, it's a very, subjective kind of situation, but anything that you've seen, any guidance around that?
Yeah, it's a great question. I think you actually said it really well. Like, I think it's, it's challenging, right? Like, I mean, I think, we live in a culture where people talk about. I
think you're cutting out a little bit, Asif. I don't know if it's just me.
Yeah, I thought it was me.
Asif, can you hear us?
We can't hear you.
We can't hear you, Asif. Can you?
Oh, I don't think he hears us either. We can't hear you. For some reason, we suddenly can't hear you. Oh, not sure what happened.
Can't hear you.
Can you hear me, Ria?
Yes, I can.
Okay.
Can you hear me?
Yep. So suddenly we lost.
Now he's on mute. Now you're on mute,
Oh.
Asif. It shows that you're on mute on the screen.
Omar, you're gonna have to edit this part out. You're gonna come back in? Riaz, what's the venture you're working on?
Yeah, so it's my business is called Eschitify, specializing in unclaimed property. So
Oh,
there's
awesome.
billions of dollars in. I think we may have talked about this in a past session, but there's billions of dollars in unclaimed property, so bank accounts, life insurance policies, voided checks, and others, and growing as people are getting older and as governments are trying to have more enforcement of unclaimed property. And so the mission of the company is to prevent unclaimed property from happening in the first place. And there's a number of life events that happens, when people move, when they get married, when they get divorced, when they pass away. And so kind of looking at, solving that really big problem around discoverability claims and preventing that from happening in the first place.
Awesome. That's fantastic. So I'm going to just talk a little, since Asif is going to come back in, I assume. Chris, are you available to come on for a second? Chris.
Hi.
I wanted to highlight you for a minute because Riaz was talking about the challenge of going after and self-funding a startup, and you created a funding stream for yourself. Do you want to talk to that? Do you mind talking to that?
Yeah, no, that's fine. Yeah, so I'm in the EdTech space. So I'm a teacher. I'm a high school teacher, and I'm definitely ran into some funding issues because in order to, I'm trying to develop an e-learning platform at first, but then you need a developer. To get a developer, you need money. To get money, you go for some grants, but to get the grants, you need the MVP, but then you need the developers to do that. Like it's just a vicious circle. So what I ended up doing was going a different route where I'm offering a tutoring service. So, but I'm just trying to make it more affordable for more students because tutoring, obviously, over the last year and more, it's really increased, but the price is completely out of whack. So a high school teacher with my experience, you could easily charge $70 to $80 per, but I'm just trying to make it more affordable for more people. So right now, it's not even a soft launch. I'm just testing out the idea, and we're going to be launching our site, I think, in about 2 weeks. I'm working with Garrett right now on it, and so so we're just getting that landing page and some other things done right now. But it is very difficult to find funding, especially for startups, because there's two things that most companies require for any kind of government grant. It's 2 employees, but most startups don't have that. We're all bootstrapping, we're putting in sweat equity, but we don't have 2 employees on the books. And then you need at least 2 years financials, which most people, especially in the startup stage, won't have. So that's basically the issues that I've been facing.
Thanks for sharing that, Chris.
And
ventures. Sorry, go ahead.
Yeah, that's okay, Riaz, go ahead.
Oh, thanks for sharing that, Chris. I was just curious about, when you're talking about the grants as well, does that include things like SHRED as well that requires like 2 employees? And is that the same thing, or were there specific kind of...
Yeah, whether it's SHRED or any kind of government funding. The only one that I've seen that doesn't require it was the one that is, I guess if you get in a partnership with the university, then that helps. But then the other one was the IRP, the Investment Readiness Program. So if you're a business that is a social venture, then you might be able to, but I think there was only 1 or 2, I guess, edge companies that might have got it, but they were definitely more established, I would say, and they've definitely been around for a while. So I don't know if Lisa can talk about that, but yeah, funding, like there's only so many dollars that can go around. And funding is very tight and very conservative, at least in Canada. So I had a friend, and I have one friend, no, just kidding. I have a couple of friends, but one was out in Asia, and they take more of a risk. Like, oh, you have an idea? Okay, yeah, we'll put in some money there. They're gamblers, right? But if you can prove that it's a good idea, then they're willing to take that risk. And I guess that's, it's a bit different mentality. So I guess that was going to be my question for Asif is, the angel investors, like how conservative are they? Is it Canada's like really high intolerance for risk, whereas the States, it's a lot better. It's a bit easier. And then when you go to Asia, it's a lot easier to invest in an idea as opposed to show us your revenue, show us your books. So that was going to be my question, basically.
Yeah, I think we should put it to Asif. He's coming back in. He's just messaging me on email here. But to your point, Chris and Riaz, I think the one thing that we're starting to see is, first off, there's a lot of competition for money that's out there. And secondly, but that's not to say that you can't get funded. It's simply that I think you need to have a model and a plan structured such that you can compete for that money. And then secondly, we are looking for and trying to help our ventures at Edge develop alternative sources of funding, like get to first revenue. So instead of going to like creating an MVP that is almost pre-MVP, right? Getting to having concept or something that you can sort of pre-sell in order to get your development funded if you're talking technology. So, and that's, I mean, obviously that's challenging. It requires rethinking what you're doing a little bit, but there are ways to get things done. It's simply a question of starting to think a little differently, or, you know, just not take no for an answer until you find a way. Hence why when I was talking to Aya, that we were talking about ways to bring in and bring her concept to market through a partnership, maybe, rather than trying to go straight to her big vision.
So sorry about that, guys.
No problem.
My audio is
problem.
crashing and stuff. And this is the worst time to have an
That's
audio
okay.
on my computer. I'm so sorry. So
Okay.
do you want me to answer this question that was asked? Or?
Yeah, and then we've got more for you. We've been discussing.
Yeah. I think, this question, I mean, listen, money is complicated, and I've had some friends, entrepreneurs, where, like I think I mentioned before, that they've lost money and it's friends, and there's multiple rounds. So I think there's a bit of a point where you almost have to come to an agreement between two parties, right? Like, I think it's really important to say, look, this is angel investing. There's an inherent amount of risk here. There's massive amount of upside. Think about that in your, the portfolio and your contacts. Here's my kind of commitment, what I'll do from a business plan standpoint, from an execution standpoint. Here's the opportunity. I want to be as transparent as I can around capital, but just know that there's risks, and here's where I think that I've done. And, as a smart investor or someone, if there's something you'd like to see, or there's something you'd like to help before investing, then I think that that's something to kind of consider. And I think that's the only other thing to think about, is that, I mean, that's really the only downside of it, is just making sure that, people are fully aware and there's good communication. And I think, communication is one of those things that I can't emphasize enough, like, good or bad, as investors, we love communication, just because at the end of the day, what are we buying? We're buying a belief in your vision, your time, your skills, your commitment, all those sort of attributes. So in lieu of like sales and strategic, like, that's all that you have along that journey, So I think with the right type of partners and the right type of people that will build you up and support you, then I think it's and it's done right, then I think that that's kind of done. And if you can't find that, then I think you just have to find the right ones. And it's a journey, it's a process, it takes time to meet the right type of, people that are smart, thoughtful, well-connected, that sort of stuff. So
yeah. Awesome. Yeah, that's super helpful. I just one last quick question, and
Sure.
I'll then pass off. Is like just around, like, let's say, for example, theoretically, I'm able to get like 100 small checks from friends and family. Like, would that be looked down upon in future kind of rounds of finance? Does it really complicate the cap table? Does it make it more difficult for, communication, or like, is there any downsides of something like that? Because part of it is also like, of course, I want to be, honest and transparent about the risk, but a lot of people are approaching me. They're like, we know you, we want to invest in you. And I know that people, hopefully I'm successful, which I believe I will be. People will be upset if they didn't have an opportunity to invest. Anything I should think about in terms of like the number of small, family and friends investors, and what that might do to the cap table and future kind of rounds of investment, how that might be perceived.
Yeah, I mean, it's a good observation for sure. I mean, people love clean tap tables and that sort of stuff, but at the end of the day, I'm like, that's not a bad problem to have. You know what I mean? Like, I think, look, at the end of the day, you help some investors, they're part of your journey, you believe in them, that sort of stuff. Those things will get cleaned up with success. So I think, like, the message around giving people an opportunity to invest with you because they believe in you and that stuff, that's part of the journey. That's part of the thing. I mean, I think, I think that won't prohibit your success in the future. I mean, listen, best case scenario in life, you get, if you're looking for 500,000, it's one smart investor, super clean, whatever. The reality is that, we all have different levels of risk and tolerance and capital and willingness and whatever. So it's going to take some smaller investors to kind of get us there. So I completely understand your point, and, it's definitely some kind of thing, but I think that would be not a big concern of mine, because I think if you get the right people that believe in you, what I also kind of believe in, this is part of it, is that, building a company has got stresses, it's got joys, it's got challenges and whatever. But I think having the right people along the journey that believe in you kind of makes it a rewarding experience. I certainly feel that with the companies I advise. Sometimes I was talking to one of the guys from Product Vessel, and I'm like, I feel like a full-time employee at times, because I'm super stressed out. I'm really worried about things. I'm thinking about things because I care, right? That's kind of the fun of it. So I think so. I hope that the right type of investor.
Perfect investor in my mind.
Yeah.
That's awesome. Thank you. Thank you very much. That's really helpful. Thank you.
No problem. Thanks. I apologize for dropping off there.
Oh, no worries.
No problem.
So Jesse Lynn has a question. Some people tend to rush to get investors and settle for the first offer. Are there things as a new entrepreneur that we should look out for to protect ourselves?
Yeah, that's a great question. Valuation is always tricky. It's one of these things, to be honest with you. I was thinking about, what do I look for in an angel investor? And I think, like, we've just gone through it with one of our kind of deals or whatever. And I'm like, I think you need to kind of be reasonable and fair with people, and at the same time, the balance of protecting yourself. So, obviously every business is a little bit different in terms of comps of, where you are in the maturity of the business and sales and experience and things like that. So I guess the guiding principle I would have is, I think, at the end of the day, a lot of this stuff comes down to people. Maybe if they're investing in you, are there other entrepreneurs that have invested with them? What's their experience been like? Were they fair on valuation? Did they commit their time? Were they supportive? Were they going to help along the process? Were they going to execute? So I think doing some due diligence around that, because I think, getting the right type of partners I think it's important in every aspect of, like, not just investing, So I think it's good to be thoughtful around that stuff and find the right type of people. And, I think it works both ways, right? As investors, like, I've been in meetings where someone will say, oh, it's a $50 million value or something like that. And you're like, what are you talking about? And the fact that, like, it's kind of like, if things are so skewed, then you think, well, are you really being fair to the investor? Are you really being fair in terms of, like, what's a reasonable valuation? Obviously there's a little bit of give, but when it's so extreme, it can create, mistrust or things like that. So I think kind of being at the right, level in terms of valuation with the right people is kind of the happy spot.
Annie, did you have another question?
Yep. So basically, as an investor, what do you expect within the 4 years? So for you to decide, I'll jump in, assuming if 400K or 1 million, whatever it is amount, what do you expect in 7 years to become what? The multiply by 5 or 7 or 6 or?
Yeah, it's a good question. I mean, I think most people look for, somewhere between a 6x and a 10x. I mean, that's kind of what it's there. But I mean, it varies across investors, and this is part of it too. Listen, at the end of the day, great people, there's certain factors I'd say, why do you invest? Is it knowledge? Is it connections? Is it relationship? Is it return? What are the factors? So everyone's a little bit different. I will say, it's funny, I think, like, part of the reason you invest in these things, I spoke to this one angel investor, more just out of curiosity, nothing to do with greed. I asked him, what was your best investment that you ever did? And he said it was an education company, did 80x. And I'm like, I play golf, and I'm like, that seems like a hole-in-one to me. Like, it seems like that's kind of a, but you got to be realistic, right? It's like, that's a got there. So, you know, I think that kind of range of maybe a 6 to 10 is there. But listen, I think the nature of the business is that it's risky. So, you know, if people don't lose money or it's not too much or things like that, and I guess it's a composite of the various returns, you know. But I will say the thing that really kind of matters, I think sometimes, and this might be specific to me, is that I invest a lot in people, you know. So, you know, if you want to be in people's lives for 5 years or 10 years or see them succeed or really believe, I mean, a lot of people that are angel investors have done well for themselves. So it's not like it's the only thing that drives them, you know. Does that answer your question?
Yeah, and we are expecting 7 years when we are considering, or 5?
Well, yeah. You know, what's funny is, so this company that I've invested in, 7 seems completely reasonable. This company Keto that I've invested in, we're trying. This is a different business model, 4 to 5 years. You know, but you know, 7 is not an unreasonable exit. I mean, I think that's kind of a, you know, a standard kind of thing. I mean, as investors, earlier is always better, and higher is always better. So, I mean, but you know, I think the one thing that's really important though, Henny, I think managing expectations. You know, there was one company actually I was thinking about. I was going to invest. I was like, this company is the bomb. I love them. I'm in. Everything went well. I said I signed up for the due diligence, and I got on one due diligence meeting, and I was like, all right. And I kind of they sold me on a bill of goods. They were like, you know, we're going to get 80 to 100 and this and that. And I kind of liked him. He had good charisma, but then I kind of did some digging, and it was like the business model wasn't clear. It was inconsistent. I talked to some people that knew him from a previous thing. So, you know, at the end of the day, it's like, you know, you just have to manage things, you know, and I think people really respect that. You go, look, I'm trying for this return. This is what I'm thinking about. It may take longer, you know, but I'm committed to this business. And, you know, it's funny, like, you know, one of the questions I think is really important, like I invested in a company called InMedics, and I have an autoimmune condition, and they actually measure autonomic response. So it actually measures your autoimmune response, and like it's kind of like almost measuring your blood level. And I reflected, I go, why did I invest in that company? Well, I met him 3 times. I met him in Toronto. I did a due diligence call. I was on a screening call. I did a one-on-one call. And they had a great valuation. They're able to raise capital. They had a good product, all these sort of things. But what really got me is I said, why are you doing this? Like, what is your purpose for being a CEO? You're a doctor in Seattle, and now you're a CEO. And he said, well, you know what? I want to be a chief medical officer. When I raise capital, I wanted someone else to be the CEO, and I'd like to be involved in research. But the reason I'm doing this is that my limitations being in Seattle is I could only help a small market. And it wasn't really my number one choice to be a CEO, but in order to see my vision realized, this is my life and I'm committed to it. And, you know, I knew some other investors that knew him and stuff. And I was like, very patient, great communicator, very realistic, good collaborator. And one of the people on the health science team in our, Pacific Northwest chapter looked at 100 deals. This is the only investment that she did. And I was like, yeah, you know what? This kind of has a good feel. So I think people are so important in the beginning because, you know, you're not investing in Apple, right? Like, this is not an established thing. This is like, you know, the people and their ability to be resilient and change and be straightforward, I think are so important.
Mm-hmm. Thank you.
You're welcome.
So when you and I spoke before, Asif, we were talking about the issue of diversity in investing, not from a diversifying your risk point of view, but from a gender and racial diversity issue. And I wanted to touch on that a little bit. After our conversation, I've been doing some reading and research and have come to understand that more diversity means higher financial performance, apparently. There's a recent study out of McKinsey, a global study, saying that the most ethnically diverse executive teams are 33% more likely to outperform their peers on profitability, and companies with the most ethnically diverse boards are 43% more likely to see higher So talk to us about that. I mean, there's a lot of talk among the startup entrepreneur community around how it's harder to raise money in certain communities. Do we have that problem? Do we need to
Yeah,
address that problem in a more serious way? So
yeah. Thanks so
let you
much for
talk.
bringing that up, Lisa. It's funny. I actually had that comment around McKinsey as well, just at a high level around the balance of like genders and ethnicity, higher profitability and value creation. So I feel like there's studies around kind of the value of it from the economic standpoint. But it's funny, as I was preparing for this presentation, I'm like, it's kind of a funny question of the society we ask, like, why should I invest in diversity? I'm like, well, maybe
Right.
we should ask the question, why do you not invest in diversity? It might be a fair question to ask. And,
Exactly.
truthfully, this has been a bit of a journey for me because, I've came in financial services and, I was predominantly a minority. And now I'm in a different situation where I'm investing and, I'm even in the group I'm involved in a diversity and inclusion committee where we're helping kind of create more content. We'd love to get more diversity in our deal flow. We're reaching out to people, and I think it's so important. And like a part of me thinks like actually I was preparing, like I actually in my travels I met the first Black real estate agent in the U.S. and such an incredible person. Like we just met in Mexico. I started talking to him, and he told me as he's kind of in the last chapter of his life, his number one goal is to help Black communities get mortgages. And it's a big challenge. And I mentioned I was involved in real estate, and in the U.S., like 44% of Black families own a home, and 73% of white families own a home. And in places in like Minnesota, it's 25% of Black people own a home, and 75% or 75, sorry, percent of people own a home. So I think sometimes as a society, we got to figure out what are these gaps. Like the gap in wealth is like in home ownership is the worst it's ever been since 1934. So I think there's kind of these societal questions we need to kind of ask ourselves. But I think there's kind of that level. But then there's the proof points around the McKinsey reports. But I'm like, entrepreneurs is all about great ideas, and great ideas come from diverse people with diverse experiences, with diverse thoughts and diverse businesses. I'll just tell you a little funny story kind of related. I saw an interview with Shaquille O'Neal, and he said the worst investment decision that he ever made in his life was that he didn't invest in Starbucks. And he said that the reason he didn't invest in Starbucks was because Black people don't drink coffee. And that was his exposure to that segment. And there's a couple of things that went through my mind, because first of all, Magic Johnson invested in Starbucks and he made $70 million. And Shaquille O'Neal said that was the biggest mistake. And I thought, well, someone's not bridging the gap here around like this potential investor, Starbucks servicing this market and his exposure around things. And, for him to be that forthright around what he lost. A little bit of like ironic twist here to the story is that I actually met Shaquille O'Neal in Beverly Hills at a Starbucks. And I'm like, which I thought was kind of funny. I hadn't heard the story before, but I met him at Starbucks and then I read that story. And I'm like, this is kind of funny. This guy is going to Starbucks now and obviously not an investor. So I think it's absolutely critical. We do some startup visa investing at Keiretsu. And I'm like, this stuff gets me so excited because for example, there's a company out of Turkey, they're doing $12 million of revenue. They actually convert plastic bottles into usable straps for construction. These are like just super kind, gracious, smart, 10-year track record, 50% of the sales are exported. They want to come to Canada. They're going to create jobs. They've got good vision. We're trying to help them. And I'm like, maybe because I have a certain purview around some of these entrepreneurs globally, I think, what an opportunity for our country. What an opportunity for our economy. Everybody wins,
Yeah. Yeah. We all get stronger together.
Yeah.
So Dirk's asking, what's the minimum viable criteria that you use, the minimum criteria that you use to look at before investing? So you mentioned growth, sales, addressable market, additional client acquisition, skills, value, but what are sort of the bare minimum in order to bring an opportunity to you?
Yeah, for sure. All those things that you mentioned are very important. And I think, the most important thing is, for me, and this is my own person, is the person. because oftentimes, they're setting the tone. They've got to research. You're believing, you're investing in them, because especially for early stage startups, like I think it's so important. And actually, I'll share an example with you. Like I invested in a sales automation company. It was one of the first few investments I did. And they had a really tough pandemic, like a really, really tough pandemic. And, they went, because a lot of people that were doing full service went to self-serve, and they were trying to position and pivot to self-serve. And it took a long time. They had to go through a lot. They went through a capital raise. They brought a bunch of new clients self-serve, and they're really crushing it. And I thought about it after. I'm like, I just really liked them as people. I thought they were really smart. We had some really good conversations. So I kind of believed in the space because I knew some of the results. I knew the clients. So I think that there's an element of, everything has varying degrees, but there obviously has to be a bit of a baseline around the business plan, the clients, the sort of things that they're doing. And if you're going to go off that a little bit, I think it's got to be really around someone that's got a really, really strong vision. I'll tell you, one of the easiest things is that when you get on some of these calls, deals have been vetted, and some of these seasoned entrepreneurs have done 3 exits, and they're like super smart around, look, we've got a 4-year time horizon. We know how to outsource manufacturing. We've got key clients set up. I've been on a call like that where some of the filters, like around air filters, and they've already got stuff lined up, and they've got research, they've got patents filing. They've taken companies public, so there's an element of that from the investor side. On the other side, where there's startups, it's going to be around that person, I think, and that the viability. It's got to be both, because in some ways, as much as you like people, you still got to believe there's a viability here around the business, the opportunity, the scale, the market, the competition, all those kind of factors.
What about when the person is right? Like you could see yourself investing in the person, but they don't have the right venture on the go, or the right, not that there's any right or wrong, but it's not something that you're excited about.
Well, it's a great question. Lisa, I got to check myself too, right? Because sometimes I think, you really believe in that person, and, you want to support them in some sort of ways. But I think, as entrepreneurs or as advisors, you've got to give them the best advice to help them succeed, because, I think sometimes, like for example, I mentioned one of the companies I didn't invest in, but I liked them. So I did like 4 introductions for them, right? So I think that's kind of the beauty of, the startup ecosystem, like in the VC world, or more the angel world, sorry, that, it's not always dollars, right? It can be time, it can be ideas, it can be things like that. Like I was actually just talking to a startup company. We had a call, and it was kind of funny because we were like, oh, like I know them for a long time, and they told me their business idea, and I'm like, I'm sorry, I just have no excitement over that. And we started talking about it over an hour, and I was like, look, if you position it this way, and we think about this, and you sell it that way, and you think about it from, the client's perspective of this, and then at the end of it, I'm like, okay, you guys have some work to do. Come back with a deck around some of your positioning, but I think that this could work. But you're not even on the same page. You're not even saying the same language, and I'm not trying to be punitive. It's just that you haven't had a chance to think about it. And I go, let's just think about this like a brainstorming session. Let's think about this around, what do the clients need, and what do they care about, and how can you impact them, and how does this align with your life and what your skills and what you can bring to the table.
Yeah, it's clear to me sometimes that entrepreneurs start and they have, great ideas, and they've picked one, and maybe it's not going to be the one, but they're still going to be hugely successful one day. So.
Yeah, totally. What's funny is that like, and sometimes you miss this opportunity. Like one of the reasons I invested with Paul, he's got 40 years of experience, and he's told me how he's lost on a lot of deals. And one of the stories he told me that I absolutely loved is that one of his startups got him an opportunity to go to Davos, and he heard Mark Zuckerberg speak. And he's like, the line that it stuck with me, and imagine hearing this at the inception of Facebook, is he said, look, most companies go vertical, we're going to go horizontal, right? And I'm like, wow, that's amazing. He had that vision. You heard him say that, and you're a part of that kind of stuff. So you're just always trying to glean, like, what are those sort of things. And the other thing I think is funny is that with experience and that sort of stuff, like that's why I always try to socialize the ideas that I invest in. I invested in this one company called Orion. To answer your question, how we did it, they actually have like a lot of technology finding cures to things like cancer, and they're working on one for COVID. They've been funded $1 million from the Swiss government. They have a really strong medical team. I am not an healthcare expert by any stretch, but the deal was like written by one of the senior partners in the Midwest. They did warrants. We got preferred liquidity. All the partners invested. It's a platform, so it's a good way to kind of diversify risk. They're actually able to raise capital, like $14 million, or 11.5, sorry. So all those kind of factors kind of weigh in. And I talked to the CEO, and he's like just a really, I think, a really smart person, and he knows, I think, the way to exit this business. You know?
Awesome. Any other questions for Asif? Omar, are you getting inspired as an entrepreneur? Oh, Omar
Yeah,
is a
for
student with
sure.
us at Edge. So thank you. This is awesome. I know it's a big topic, and we're trying to cover it in an hour and a half. But I guess it's it's important to kind of get your view and get a sense of what the community is like, and how we can bring our ventures forward within Edge. I have one question for you as it relates to something we were talking about when you dropped off. We have Chris Fujimoto on the call, and he started an edutech company. Ran into some funding challenges, and so he created a spin-off business, a tutoring company, to fund the development of his edutech company. Is that a plus when he goes to, like, that'll get him some at least I would assume, get him some entrepreneurial let's call it superstars or something when he goes to look for investment again?
Well, I think so. To be honest
What's
with you,
your
like
thinking on that?
I think so. You know, to be honest with you, it's funny. Like some of the investments that I've made, actually many, I've done a couple more investments, like through some joint stuff and things like that. And I think that entrepreneurs have a certain mindset, right? And you read articles where they see a lot of problems, right? Like, why is there the inefficiency that exists with restaurants that I got to go to Tim Hortons rather than dining in? I love that. Like, that's a great observation. So I think, and I think like I was just working with a friend of mine who's taking a company public, and it's like when you build, it's like you're just always building up like your knowledge, your network, your capital, and things like that. And like if there's something that you can do that's done there, I think it just kind of shows that you're a serial entrepreneur, and hopefully you can take these people along your journey and take those findings from those other things and apply them to what you've done. So I think that I think that's really, really
I think it can only make you stronger.
Yeah, totally.
Funny, I was involved early in my career I was running a marketing agency. I got involved in the tech startup community, and at that time worked with a company that had three partners, and one of the partners went and did consulting work, and that's how they paid all their co-op students, and then like to do development work. And then back then there wasn't the same student funding that there is today. And then a couple of the other guys did work on the side in order to pay their families' expenses while they were building this company. And in the end, they all had it maybe 6-7 years, and then they exited out through a huge sale for one of the, it was a learning management system. So they sold to Sun Microsystems and walked away with some serious, but they brought some investors along with them in the end. But when they first started, that's how they started. So it's certainly been around a long time, finding creative ways to solve problems. So.
I love that. You know what, Lisa, actually you touched on something I just want to kind of know is that sometimes it's like investors, you want to know what's your resilience, right? Because you're going to face obstacles for sure, right? Like you start with a plan, and how are you going to, and to be honest with you, I'm like, I just curious how people got to a certain path or journey, or why they're starting this company. Like, why are you doing this today? What's kind of your what kind of gets you up to get super excited around building this company. So I love stuff like that where, people just show a certain high degree of tenacity and resilience to kind of succeed, let's face it, it's not easy. It's not, not everyone succeeds, right? Like as investors, I see tons of deals and yeah. And I think that culturally there's been this shift towards, startups and, being lean and agile and side hustle and all these sort of things that have become, it's a tough bar. Like, I think sometimes I think like I didn't grow up in that world. So there's a lot of pressure on people. I think, the benchmarks are out there. So, and I know it's
easy to get discouraged though.
Go ahead, Lisa. Lisa? Well, maybe I'll
just saying it's easy to get
discouraged. Yeah. I couldn't agree more, to be honest with you. That's why, you think about smart money and people and whatever, I'm like, look, I remember reading, they say your life is defined by the 5 people you spend the most time with, right? So I think just, especially as you're starting out, you guys are doing some great things. You're very innovative. It's a tough grind. And I think, having the right people and believing what you do and, life's a long journey. Listen, for me, even sitting here talking to you guys, I find like my life has flashed before me because, I still feel like I remember the days of investing when I was 16. I didn't think that, I would have a chance to speak to, young entrepreneurs that are, striving to own their own businesses. Like just life goes by like that, or, that people give you a chance or whatever, I mean, I still remember all that stress and anxiety about worrying at a young age. What are you going to do, So.
You've got a question. We've got 4 minutes left, so I should be wrapping up the call, but I'm going to give you the last word.
Oh, just when I talked to you, Lisa, last week, you mentioned something about protecting your IP. And I was wondering if you need to do that when you approach it. Like, does a startup need to have its IP protected before it approaches an investor, or is it okay if it doesn't have that?
Yeah, well, it's definitely a question that they're going to ask for sure. I mean, I think it's funny. I was on a discussion call with Karetsu just around this, and we're actually looking at having a call around the importance of IP and how it relates to businesses. So people, investors love to see that sort of thing for sure. Now, I mean, depending on the investors and that sort of stuff, I mean, part of the funding could be towards protecting the IP, but I think at a minimum, you should look at, what the costs are and whatever. For an investor standpoint, it definitely has appeal,
Great, thank you.
I feel like the time's just flown by. I didn't know how an hour and a half would go.
Quite prohibitive, though, Asif.
No.
Yeah, I know. We need more time with you. So, we'd love to get you back here as a mentor again. How can the group get in touch with you? Or are you open to people reaching out?
Yeah, for sure. Just, reach out to me on LinkedIn and, send me a request if there's something that, I can help you with. I'd be happy to. I mean, part of my motivation for doing these sort of things that, this is on a very personal level. As I talk about diversity and inclusion, I'm super passionate about it. I think that there's ways, I love bridging gaps. So, if there's ways to bring communities together, that brings me a lot of excitement because I think things that are inefficient and if there's ways, and I love that we have got such a multicultural group on here. I wish you all very well. To be honest with you, I look at you and I think I wish I had this when I was your age, like just even the visibility around entrepreneurs that had a certain, drive and just the kind of the cross section, I think is fantastic. So, if there's any way that I can help and support the group, I love what you're doing. So, feel free to reach out and I'd love to kind of continue the conversation with you.
So Omar has put Asif's LinkedIn profile in the chat. So connect with him there. And thank you all for being here. Thank you, Asif, for joining us tonight. Great conversation. Dying to do it again.
Yeah, thank you so much for including me. Thanks so much. And I promise next time if we do it, there'll be no tech issues at all.
Tech
really
issues, it goes with the turf.
Yeah, it was a lot of fun. I really appreciate it. I'm really glad for meeting all of you, and thanks for your time. And I wish you success, and I hope that you'll reach out.
This is very helpful. Thank you very much.
Yeah.
Thanks for being here, everybody. And
all right,
thank
take
you.
care,
Have
everyone.
a good night.
Bye. Lisa.
Yes.
Yeah,
1 second.
yeah.
Just 1 second.
That was so fun, Lisa.
It was fun, right?
Yeah.